Welcome back, dear learners. Before the ad break, we're able to define cash transactions as well as credit transactions. And remember, in this lesson, I'm focusing on combined cash and credit transactions, but I want to see their effect to my debtors control account. So to begin with, I'm going to start with cash journals. Cash journals. How can they be recorded when we are preparing the debtors control account? Let us see. What I have first is my cash receipts journal. This is a journal in which all cash received is recorded. So when we receive cash, we record it in the CRJ. It is very possible that when our debtors then pay, we record the amount that they have paid us, where in our cash receipts journal. Let us then see. Here is my cash receipts journal. So I have my bank, I have my sales, and then I have my cost of sales, my discount allowed, as well as my debtors control amount. So remember, when my debtors pay, I record that amount in my cash receipts journal. I have received some money. How then will I record it in my debtors control? Here is my debtors control. My debtors control account is an asset account. That means it increases on the debit side, but it decreases on the credit side. The balance that you see, 24,200, this is the amount that our debtors are owing us. And when debtors owe us, they have to pay the amount that they owe us. But when our debtors pay within the specified time that we have given them, we also give them what is known as discount. So we allow them discount. That therefore means when they get to pay us, they pay us less because we have subtracted discount from what they should have paid. So you will find that we have bank and discount allowed, and the journal is CRJ, and my amount is 4,550. What does that mean? I took my 4,280 and I also added my 270 to make it 4,550. This is how you would record your cash received from debtors when you are preparing your debtors control account. Remember, you are now recording your bank, that is the amount of money that you've received, but as well, you should remember to record your discount allowed. When they pay on time, we allow our debtors discount. The other cash journal that we are looking at is the petty cash journal. The petty cash journal is used to record small cash payments. Very important, small cash payments. The question then is, how does it affect my debtors control? So here is our petty cash journal, and as we see here, we have debtors control and we have 280 rands. When we come now to our debtors control, I have to keep reminding you that my debtors control increases on the debit side, all right, because it is an asset account. However, it decreases on the credit side. Here we have debtors that are owing us 24,200. It will happen that they will pay. So when they pay, we come here and we say bank and discount, and we record the amount. However, if it happens that the amount that they have paid us is more, they could have overpaid us, then that amount, we should refund it back to the debtors. The moment we refund it, if it's a small amount, then we can refund it from the petty cash journal. So that is why then find on the debit side, you have your petty cash, BCJ 280. So this can be a refund to our debtors because they had paid, but they paid more than what was necessary. And the amount does not warrant for us to do an EFT so we can do a small cash payment. Remember, petty, small cash payments. So we can do the refund from our petty cash. That is how the petty cash can then affect your debtors control. Let us look at the next journal. The next journal are going to be our credit journals. Our credit journals. The first journal that we're going to look at is what we call the debtors journal. Most of you know this as the DJ. What is the debtors journal? This is a subsidiary journal in which all credit sales, when we sell goods to our customers, on credit, we record it in the DJ. This is before we post it to the general ledger. Remember, in this lesson, I'm focusing on the general ledger and I am preparing the debtors control account. Only credit sales of trading stock are entered in the DJ. Therefore, cash sales will not be recorded in the debtors journal. Only credit sales will be recorded. Let us then see how our DJ looks like. Here is the debtors journal. So I have my sales, which is 12,800. I also have cost of sales, which is 6,400. Which of these two now will be recorded in my debtors control? Let us see. Here is my debtors control. I'll remind you again, this is an asset account. On the debit, it increases. On the credit, it decreases. So our debtors are currently having a balance of 24,200 from the previous month. However, we have sold goods to more debtors. We've sold goods on credit. So the moment we sell goods, it then increases our debtors. Hence, you see, I'm bringing it to the debit side, and I'll say sales. And the journal I'm posting from is the debtors journal, the DJ. And I will now bring in 12,800 and not 6,400, but I'll bring in my 12,800. That is what I'll bring to the debit side of my debtors control. It means my debtors have increased. The DJ is then posted to the debit side of your debtors control. My next journal is what we call the debtors allowances journal. This is a journal that records returns or allowances of debtors. In the event that our debtors are not satisfied with the quality or the type of goods we sold to them, they are allowed to return the goods. Or if we have overcharged them, they can also then claim for an allowance. In that case, we record in what we call the debtors allowances journal. Here is my debtors allowances journal. I have my allowances, which is 1,200. I also have cost of sales, which you see here, 600. I'll ask you again the same question. Which of these two do you think will go into my debtors control? Let us see. My debtors control, I'll remind you again, it is by now you know, it's an asset. It increases on the debit side. On the credit side, it will decrease. So, we sold goods to some debtors. Once we sell, you remember which journal I taught you? I taught you what is called the DJ. That means once you sell, you're going to have your sales here and the DJ. And we record the amount here. But if we have returns now, we have allowances from our debtors, that means we have to decrease our debtors. We would then bring our allowances to the credit side. We are decreasing our debtors account. So you will find I would then say debtors allowances. And which journal am I posting from? The debtors allowances journal. The amount that I bring is the 1,200 and not the 600. I need you to be careful of that. Not the 600, but the 1,200. And then it is on the credit side. It is there to decrease my debtors because there has been an allowance. My dear learners, We'll go for an ad break, and I'll see you shortly.